I want to speak a little bit about today what is order flow? What is supply and demand imbalance? Why is it important to us? And, to set a foundation here, before we get into with later videos on how we use the zones, what these zones represent, the anatomy of a perfect zone, give you some trade examples, show you how we use these zones to trade off. We have to first preface that by speaking a little bit about order flow and supply and demand. Now here's a fact, guys, about trading. In order to become a successful trader, it's critical to understand the actions and strategies that successful traders employ and how they differ from those of unsuccessful traders. There's something that almost all professional traders use that retail traders largely ignore, and it's called order flow, supply and demand. Everything we do in our trading revolves around order flow and supply and demand based principles. Our goal, our edge, our business is to identify supply and demand imbalance in the market. And once you understand how to identify key areas of the market and the order flow imbalances that are occurring in those areas, in our zones, you become comfortable with accepting risk because you realize you're trading with an edge. You have probabilities in your favor, and that's what successful trading really comes down to, true acceptance of risk. Now, we've learned to distinguish between which trade locations and conditions provide opportunity versus which conditions produce random noise. The end result for us is that we limit our trading to high-quality trading opportunities which require order flow confirmation in order to enter a trade. Now, our trading and market perspective is reality-based, and that is to say it's based on the reality of the market. And trading in its simplest form is about supply and demand, shifts in the supply and demand in the order flow, nothing less, nothing more. And when your trading strategy is based purely on reality, and I'm talking about the reality of the market, and that's based on real-time market-driven order flow and areas of supply and demand imbalance, then how and why prices move in any market, it's not that difficult to figure out. So all of our trades are based on market-derived information coming from that driving force of the market called order flow. What is order flow? Oh, the expression order flow seems to have spread all over the internet lately. People make assumptions about what it means, how it shows up, how it manifests itself, how a trader can use it, discover it, most importantly, identify, understand it, and use it to their advantage when they can identify it correctly. So what is order flow? Well, simply put, order flow is the real-time supply and demand caused by all the sellers and buyers coming into the market that actually causes price to move. When you conduct a trade, initiate a trade into the market, if you're buying the offer to get long or selling the bid to get short, you become part of the order flow. Order flow is what drives price. Change in order flow precedes change in price. So the keys to successful trading, basically simplistic. It's not rocket science, guys. It really comes down to not more than learning to understand the basic supply and demand market structure to determine where balance and imbalance lies in the market. Both in the past to see areas where supply and demand were in balance, as these areas that our zones represent. We're going to go further into the zones in later videos, but also in the present by reading the real-time order flow to properly gauge the buy and sell pressure. We learn who the participants are and to train our mind to see logically and simply without the noise of pattern-based systems and price-based indicators. What it comes down to is that everything that happens in the market is a direct result of the order flow. And it's important to realize that change in order flow precedes change in price. So it makes sense that we have tools in our trading arsenal that enable us to gauge the true supply and demand in the market, the areas of supply and demand. Understanding where change in the order flow imbalance occurred in the past and is occurring now, real time, in the present is huge because these zones, our price zones, are where trend change or change in auction is likely to occur. And where change in trend occurs is where a trader has the most opportunity, the biggest reward with the smallest amount of risk. Now, markets move under the action of supply and demand. In fact, nothing else causes markets to move. And people think that things like fib numbers or trend lines or price-based indicators, RSI or MACD, influence price. But what it comes down to is all sorts of factors may go into the decision-making process of the various buyers and sellers in the market, but the only thing that actually moves a market is the collective actions taken by the buyers and sellers, by the order flow that they're creating, the supply and demand that they're creating. So by concentrating our efforts on understanding what the market participants are actually doing and identifying, and this is key, identifying the important areas where they are conducting their business, we're building a strategy on a solid foundation. And this is exactly what we did when we developed our market strategy. There's very useful information to be gained by monitoring the order flow at key price levels and in certain contexts. Doing this allows you to kind of take an inside look at what price is doing, instead of just price itself, but what's causing that market to move and print that price, and form a logical conclusion on what's occurring in the order flow. What's occurring in the order flow is losers capitulating, winners taking profit, new trades being initiated. And for us as supply and demand-based traders, we're looking for this activity to occur in these previous zones of supply and demand imbalance. In fact, one of our top goals as a trader, running a trading business, is to identify the high probability, low risk price zones ahead of time and know what we want to see happen in these key areas when price comes into them in order to take a trade. Okay, so let's talk about what's causing price to change throughout the day. It comes down to this, guys. Since most traders have a large portion of losing trades as their results over time, and this is a different perspective to think about. It's a perspective that most traders really aren't familiar with. They don't stop and think about what's actually driving price. What's the fuel that's coming in to drive price in a certain area? What's causing price to stop in a certain area and change direction? What's going on beneath the surface? Well, think about this, guys. About 80 to 90% of price action is simply losers liquidating their losing trades. That's what's causing price to move. Because, again, it makes sense. If most traders have a large portion of losing trades as their results over time, it must follow that a lot of what's causing price change must be losing trades being liquidated. So when you begin each day, before you enter the market in a trade, you have to ask yourself this question: where is the loser? Where is the loser going to be crying uncle? And being able to answer the question, where and when will the loser quit, can lead you to a picture, an idea of where price is headed. So the business of trading is really one of identifying those areas where a significant number of traders are going to feel compelled to take action and then enter to take advantage of the fact that they're getting stopped out of the market. And if you can achieve this on a consistent basis, you've got yourself an edge. If you can read the market and identify the points where fear will manifest itself and therefore cause triggering of stops, then you're well ahead of the curve. This surge of buying or selling that comes into the market when this occurs, this whole order flow dynamic, as traders are getting stopped out, smart money traders are taking profit into that liquidity, other traders are initiating new trades in the opposite direction. If you get to the point in your trading where you can identify those points where this is going to occur, then you are well ahead of the curve. And the surge of buying and selling that comes into the market when this occurs creates an imbalance in the order flow. So for us, imbalance equals opportunity. Where is this imbalance occurring? It's occurring in our zones that we identify in the market. So imbalance in the order flow is what ultimately helps us identify the zones that you see on our market map. So I'm sure you can begin to see why knowing where the key zones of price to initiate trades from are located and when to enter that trade can be empowering to you as a trader. Why empowering? Because the surefire way to empower yourself and to improve your peace of mind trading the markets is to utilize a method that makes logical sense. And if your job is to be a trader, then at the very least you should understand and agree with the logic you're trying to utilize in the market. We trade on where the orders have proven themselves to be based on supply and demand, not where we think they might be. It's a simple shift of focus. And really, you could spend the rest of your life looking for the Holy Grail. Meanwhile, it's been in front of you the whole time. The market is simply an ongoing supply and demand equation.